Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, I'm going to teach you how to trade gold today, looking for an opportunity on this market as price has extended to the downside. So, how to trade gold. Now, one of my favorite trading techniques is to look for key areas of support and resistance, and then look for a really key pattern to form. Now, my favorite patterns are the double top patterns, where you can kind of describe it as a sort of V shape, or the double bottoms, where you can describe it as the sort of letter N. And I'm looking for basically price to come into a key level of interest, invite some buying pressure if it's a double bottom, look for price to come back, look for buyers to step back in. On the reverse of that, on the double top, looking for sellers to come in. If price comes and retests, look for sellers again and look to take action on the retest. Okay, now the reason why I like doing that is because what you're essentially waiting for is waiting for price to react to a point first, and then looking to see if the sellers continue to remain there, or if it doesn't and price continues to the upside, or in this case to the downside there, then there's no reason to be in the position in the first place. It's almost trying to identify if that level is actually going to hold. Now you can actually see these all over the chart. This is the gold daily chart. I'm just going to show you, I'm just going to highlight a few areas. Most recently, you can see this double top here, where price came through the level, retested the same highs, pushed to the downside through there. You can see we had a double top in here as well. Price moved down, pulled back in, moved to the downside through here. We have a double bottom in here where price came, retested a level, came back in, traded to the upside. You can argue we had a double bottom here before price extended higher. Price rallied away first, came back in, and then we had obviously a very large move to the upside there. Now there's oftentimes it doesn't work. It's not 100% foolproof. Obviously there is lots of conditions around the market finding support and resistance in the first place, so you can't just blindly trade these patterns. You still have to have other factors that benefit you or that add confluence to the opportunity. And you can see here, for instance, here at the $1,800 level, price came back into there. That would technically be a double top at that point. Now, if you did look for the short, you probably would have gained a few pips off the back of that before price then continued to the upside. So you'd have to have considered a potential opportunity here where you may have only taken some profits out the market before getting stopped out on the next position and things like that. So it's not obviously something that is 100%, but there's opportunities all around like that. Now, you can look at this on lower time frames as well. So the reason why I'm saying that is because we double topped recently, price has pushed to the downside, and currently price is finding a little bit of support. Okay, we've come back into another key level, which was around about the 1875 handle, and we've started to find a little bit of support here. Now that was after the NFP data, where the dollar strengthened significantly, and we've just basically had two really strong days of bearishness in this market on gold. Now, typically when price does push aggressively away, it can be followed by either a week or a day of just consolidation. Obviously, we don't know the timings because the market is random, so we won't know exactly how long it's going to react in this way. However, what we can do is kind of build in zones and then look for opportunities outside of those zones. So if I actually go down to the 4-hour time frame, this is again one of my sort of favored trading time frames. You can see here that we had the aggressive move to the downside, slight consolidation, and aggressive move to the downside. Now we're building up a little bit of volume here. We're building up with buyers and sellers essentially being neutral at this point. There is no buyer or seller sort of winning in this market at the moment. So that's why my attention has been drawn to this point for one. For 2, we're kind of forming that little bit of a double bottom pattern in there, where we could argue that if price was to complete the pattern by trading through the neckline, it would open the door for a move up to the 1910 area, where we can see that we had this consolidation. So that's what I'm looking for here. I'm looking for one or two things. I'm looking for price to either trade out of this zone, come back in. Now what we can look for at this point is a lower time frame double bottom pattern. What I mean by that is if we were to go to like the 15-minute time frame here, what we could look for is a double bottom on the 15-minute pattern, and then look for a move to the upside there on the 15-minute time frame. Okay, again, if price was to break through this zone to the downside, pull back in, I'll be looking for that double top pattern to look for the short opportunity where price maybe wants to come back down and fill this demand zone around about that 1840 handle in here. Just to give you a quick insight into that one, if we go and actually take a look at the recent highs here at the 1955, and we zoom all the way back, let me just zoom back in there, you can kind of see that price formed a double top here. So what you could have been looking for is price to come into this level of resistance and then look for the double top. So price comes in, retests your equal high here. You can see as well that it's the open and close of the candle is lower than that high. That can be a good sign, and price then continues to push to the downside here. So that's what I would be looking for, something like that, or the opposite obviously on the other side of things, if we were to see price trade through this area of resistance. But at the moment, price is trading within this range. I'll be looking for price to break out of this consolidation before heading back to the upside. If you don't have opportunities to trade the 15-minute time frame, that is not a problem. You can look to trade the hourly time frame. You could even trade the 4-hour time frame, or like I showed you already, you can even trade the daily time frame, seeing those support and resistance levels as well. So keep your eye on gold. We're in a little bit of a consolidation here. If we could break either to the upside or to the downside outside of this range, then it could offer us some opportunities on some retests, either to the upside to fill this sort of imbalance area up here, or to the downside to fill towards this demand zone. So keep an eye on that. I hope you enjoyed the video content. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more of our Forex trading content. And I will speak to you in the next video.